This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's take a live look at Bitcoin with the CoinDesk Bitcoin price XBX index, which is trading above $40,000 at $40.50, now $600. Bitcoin is up over 7% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So looking at our top stories, Federal Reserve is keeping interest rates at near zero. Fed Chair Jerome Powell still sees inflation as transitory despite price increases in the price of consumer goods. While pressure is mounting for the Fed to taper its asset purchases, the central bank maintains it will continue its accommodative quantitative easing. Meanwhile, Grayscale Bitcoin Trust shares have narrowed their discount relative to the underlying cryptocurrency held in the fund, possibly a sign that buyers are using the vehicle to bet on the recent rebound in the crypto markets. Note to viewers, Grayscale is a sister company to CoinDesk under Digital Currency Group. And finally, crypto CEOs remain six figures bullish on Bitcoin's price. Industry insiders say the medium-term outlook for the crypto market is positive, even if sentiment is not. Among crypto broker Voyager Digital CEO Steve Ehrlich predicts 100,000 Bitcoin by the end of the year, and Richard Byers, CEO of crypto financial services company Equinix, predicts 175,000 Bitcoin at the peak of the current cycle into 2022.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Tether, the dominant stablecoin and third largest cryptocurrency with a 64 billion market cap, is important to the Bitcoin narrative as half of trades in and out of Bitcoin are done with Tether. So it's interesting to see the market cap of the stablecoin USDC grow faster than USDT or Tether. This chart from the CoinDesk research team illustrates in March and April this year, stablecoins Tether and USDC were being issued nearly head-to-head, but since May, issuance of new Tethers has completely dropped off, while USDC has taken off and grown much more in comparison. In a rare interview, Tether executives gave seemingly contradictory statements as to why Tether and USDC were growing at a different pace, telling CNBC at first that they said stablecoins in general were being issued less because of reduced demand amid the downturn in the crypto markets. But when USDC's explosive growth was pointed out, Tether executives said other stablecoins had smaller market caps and so had further room to grow. And joining me now to discuss is CoinDesk Director of Data and Indexes, Galen Moore. Welcome back to the show, Galen. Great to have you after your time off on vacation. So Tether is subject to increased scrutiny by U.S. regulators and their history of opacity in terms of what is backing their reserves. So as you see these charts, is that opacity finally starting to catch up with them?
Yeah, I don't think so, Christine. I kind of tend to interpret the flatness that we've seen in Tether, and its market cap or supply has been flat at about 64.3 billion since the end of May. I tend to interpret that as a reaction to a bear market, which we now find ourselves in. There's no question about it, something like Tether is used as a quote currency, a kind of a money market. And that kind of demand has somewhat dried up, I think.
So how do you explain USDC's growth in comparison then?
Yeah, the sort of Tether FUD battle has to be discussed carefully. I don't want my inbox filled with hate mail, but I think, the truth is that something like Tether hasn't been broken. It is a one-to-one peg because the people who use it believe that it will remain solvent. The question of whether it's got one-to-one backing has not been put to the test. And I don't think traders are necessarily naive about the notion of a one-to-one peg. They just don't care about it. I mean, for the same reason, you don't go to the Bellagio in Las Vegas and demand to see their audited financial statements before you buy chips to use at the tables. The offshore markets where Tether is predominantly used are is that for me? are, are they are, they're like casinos in
Sorry
many
about that.
respects. Other than one, which is that they do provide price discovery. So I do think the question of Tether's ability to maintain its peg to the dollar is a systemic question. It is a systemic risk. It's one to be aware of as a kind of underlying risk in any crypto investment. But the growth of Tether competitors, I don't think indicates a lack of faith or a sort of a shrinking back from Tether.
Well,
it's
just
more
going
of
back,
a
we
growth
saw that chart on USDC growing
right,
on Binance, and they've continued to go up as the price,
right.
or rather the balance of Bitcoin has also increased on Binance. So it's been keeping up with that. But we also have another chart showing Tether balance on Binance. That has nearly halved since June.
Although at the same time, it's back at the levels where it was in the spring, right? I think this is a difficult chart to interpret. I think what you're seeing here is, to some extent, response to market dynamics, and then to a little bit of error correction in the heuristics that are used to determine where Bitcoin is being held, or where the Tether is being held in this case. And
then we saw the stablecoin chart between USDC and USDT. Yeah. What's going on here?
The growth of USDC is remarkable. The flatness of Tether for the past 2 months, also remarkable. I think you see the continued growth in USDC because there is a kind of investor that does not trade on offshore exchanges and does not wish to deal in an instrument like Tether. Either doesn't wish to or cannot, is prohibited from doing so. And so I think USDC's growth is, I would guess, primarily driven by that. The sort of the issuers of Tether are correct pointing out that this is growth on a much smaller base. Tether's gigantic. There's no question about it. But the flatness in it is definitely something to take note of.
Mm-hmm. And so, more importantly, how is this all impacting the price of Bitcoin?
I'm not sure whether it's, I mean, we're seeing Bitcoin crossing 40,000 today. The XBX over 40,000, despite the bad news for Bitfinex and the issuers of Tether. That there's apparently a potential criminal indictment in the offing. That came out a couple days ago, I think.
Folks have suggested that traders are fleeing from Tether in favor of Bitcoin, in favor of USDC, which Tether was used as the trade to get out of volatile cryptocurrencies, but is the argument now that people are trading out of Tether into safer safe havens?
Well, look, I mean, it's not a question of a haven. I think it's more a question of what's convenient. To put your money onto an exchange, to make a bank wire transfer, these things can take days. Having your money in a cryptocurrency form, that's the advantage of a stable coin. You have it in cryptocurrency form, it's available instantaneously. And that is better than having it in Bitcoin, where it can go up and down with the market. You want to sort of time your entry, or take your time deciding which assets to invest in. You keep it in a stable coin, much in the same way you keep it in a money market fund in your brokerage account. The question of like Bitcoin coming back as a quote currency, I don't see it. That was the era of 2017 when altcoin trading first emerged, and we saw Ether and Bitcoin used as quote currencies. The decline since then and the replacement by stable coins is not some kind of secular thing.
All right, Galen, we got to wrap it there, but thanks for breaking it all down for us, and welcome back.
Thanks very much, Christine. Glad to be here.
All right, that was CoinDesk Director of Research, Galen Moore. Coming up, Congress is debating an infrastructure bill that has some implications for the crypto industry. We'll discuss with the Blockchain Association next. Welcome back. U.S. senators reaching an agreement on key parts of a $1.2 trillion bipartisan infrastructure bill that could be approved for formal debate as soon as tonight. Hidden in the bill is language that could have an incredibly disruptive impact to the crypto industry if left as is. Joining us now to discuss is Blockchain Association Executive Director Kristen Smith. Welcome, Kristen. So zooming out, explain to us what this bill is all about and then how it affects the crypto industry.
Yeah, so at the highest level, there's a large infrastructure package that's coming together that has been a priority for Democrats in both the House and the Senate, as well as the White House. And so, this is something that's been going on for a long time. And when Congress spends large amounts of money like that, they need to offset those expenditures with, revenue raisers. And so one of the places that Congress has been looking is to get better compliance for crypto taxes. Now, the centralized cryptocurrency exchanges have been in long discussions with the IRS about the right way to come up with a sort of 1099 style reporting that would make it easier for consumers and investors to pay their taxes. But what's problematic about the language that was tucked into the bill over the weekend is that the provision goes beyond centralized exchanges to define a broker as something that would encompass both, decentralized exchanges, peer-to-peer exchanges, and the way it's written, we think would encompass software wallet developers, hardware wallet manufacturers, multi-sig providers, potentially governance token holders, and maybe even miners. And so it was sort of hastily drafted. It was done without a lot of input from stakeholders. And so, folks in the industry in Washington right now are all working together to try to get this changed before the bill moves forward. But definitely something that we're watching because there is a good chance that this package does make it through the Senate. I think the politics of the House sort of remain to be seen. But the problem is once you get something like this in those packages, it's hard to get them out because they tend to sort of be closed for debate. So we're all working and we're doing our best. But I think that if there are folks out there that want to weigh in with their congressman on something like this, like now would be the time.
Right. I can't imagine how that would even be done. A miner as a broker, software wallet developers, it just seems like an incredibly disconnect or lack of education on, how would that even be possible?
Yeah, no, this is the type of thing that isn't even possible, right? And so it would have the effect of either sort of shutting down those services here in the US, pushing them overseas, or just having, different parts of the ecosystem operating out of compliance. So yeah, it's definitely not a practical thing. The good news is we do have a lot of champions that are working and having discussions with their colleagues.
Right. How are you addressing this issue with Congress?
Yeah, we're talking with everyone we can get a hold of. We're talking with the Joint Committee on Taxation, with the Finance Committee and Ways and Means Committee in the House and Senate. And then we have, traditional allies like Senator Lummis and others that are very actively engaged on working with their colleagues. Because what happens is when they need to find money, they need to find money quickly. And so they often tend to rush things without vetting them, without thinking them through. This isn't good policy making when you jam everything in last minute. And so, we're hoping to use the process arguments. We're hoping to use the arguments on the lack of practical way to implement this language to help us. And so definitely going to be one of our top priorities here as we head into the August recess here in Washington, D.C.
It sounds like policymakers are sounding the drum beat in terms of cryptocurrencies more and more. There were a trio of hearings yesterday around digital currency. Senator Warren had a couple of comments calling the crypto space full of shady coders. Senator Sherrod Brown calling the crypto community phony populism. I wonder what your response towards that kind of criticism.
Yeah, no, I mean, listen, if you look across the board, the attention that policymakers are paying to cryptocurrency is at a level we've never seen before. Some of that attention is very good, where there are lawmakers that have really spent time learning about this space, and we've been a part of those discussions, and they understand the value of these networks, and they understand the innovation that can be derived from these networks going forward. But there are others that either know and don't want to listen or haven't had time to listen to the community to hear the potential that we see out there. So the education is ongoing. I think the unfortunate thing that we're starting to see, though, is there is a partisan divide that seems to be coming to this space. This shouldn't be a partisan issue. There are wonderful benefits around financial inclusion, about removals of middlemen, about democratization that crypto networks are supportive of, and that should be messages that resonate on both sides of the aisle. So I think what's going to happen is over time, as there's more adoption of cryptocurrencies and crypto networks, and consumers and businesses have new applications in their lives that are powered by these networks, we will see better policy and better rhetoric. But when lawmakers come to it for the first time, they're often confused, and so they resort to the things they know, like climate, like ransomware, like illicit finance, because that's where they're comfortable. But we think the more
Kristen,
adoption, the better this will become.
You mentioned down partisan lines. How do Republicans and Democrats differ in terms of how they regard cryptocurrencies?
Well, Republicans right now seem to be, for the most part, not universally, but for the most part, we seem to be rallying around the potential for innovation, the fact that crypto networks are sort of an antidote to big tech and to big finance, and also a competitive advantage against China. On the Democratic side of the aisle, there tends to be focus on climate issues, particularly as it relates to Bitcoin mining, to the use of cryptocurrencies and ransomware, which is a topic that came up at the hearing this week, and also just sort of general illicit finance. There also seems to be concern about consumers not having enough information, or maybe being taken advantage of by different players in the marketplace. So, I think that this is something that we can overcome over time, but it's definitely in the past couple weeks, the partisanship has grown to a level that we haven't seen before. So it's unfortunate, but I think that we can recover from it, more education and more adoption.
All right, Kristen, we got to leave it there, but thank you for joining us and sharing with us developments out of DC.
Great. Awesome. Nice to see you, Christine.
Right, that was Blockchain Association Executive Director Kristen Smith, and that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. Eastern Time for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.